article was just released from Canadian Mortgage Trends talking about how Canada's GDP has dipped and what this means for the economy. In this video, we'll break down the article and present it in straightforward language to ensure it's accessible to everyday consumers to understand. Hello, it's RASHA INGRATTA'S, a licensed mortgage agent with Mortgage Intelligence since 1999, located here in Windsor, Ontario. Let's get into the article. Statistics Canada reported that real GDP dipped 0.2% in the second quarter, against estimates for a 1.2% rise. That's also well below the Bank of Canada's official GDP forecast for 1.5% growth in both Q2 and Q3. This news is right before our Bank of Canada rate announcement on September 6th. Why is it important? Well, this data will influence what the Bank of Canada decides to do with interest rates. See, the GDP is a metric that measures the direction of the economy. An increasing GDP is a sign of a growing economy, and a decreasing GDP is a sign of a shrinking economy. The small pullback in Q2 GDP lines up well with the recent rise in the unemployment rate and reinforces the point that growth is cooling markedly, even when looking through the many special factors in recent months, wrote BMO Chief Economist Douglas Porter. Monthly growth in June also came in lower than expected, similarly falling 0.2%. Statistics Canada flash estimates for July is for growth to flatline. The decline included weakness in both goods, negative 0.4%, and services, negative 0.2%. An increased unemployment rate is also another sign of slowdown in the economy. With interest rates rising, it's getting more expensive for businesses to operate, along with a slower economy, meaning consumer spending will decrease. Businesses are starting to increase layoffs, which will feed into the economy, slowing it even further. The odds of an additional Bank of Canada rate hike tomorrow fell even further following the release of today's GDP data. Bond markets are now only pricing in a roughly 15% chance of an additional quarter-point rate hike. Most economists agree that the weaker than expected data will be enough to stave off any additional rate hikes this year. The broad softening in the domestic economy will almost certainly move the Bank of Canada to the sidelines at next week's rate decision, which is now tomorrow, after back-to-back hikes, Porter wrote. Between the half-point rise in the unemployment rate, the marked slowing in GDP, and some cooling in core inflation, it now looks like rate hikes are over and hopefully done. While it might appear that the recent news of our slowing economy and rising unemployment is a negative development, it's important to understand that this is precisely what the Bank of Canada intends with its interest rate hikes. During the pandemic, historically low interest rates led to a booming economy and skyrocketing inflation, reaching a peak of 8.1% back in June of 2022. Now the overnight rate, which the Bank of Canada has the power to adjust, has been increasing rapidly to fulfill its role of slowing down the economy. As a result, GDP growth has decelerated, unemployment is on the rise, and the consumer price index, the CPI, has dropped from its peak of 8.1% to the current 3.3%. This shift is a part of the strategy to maintain economic stability. As we come to the end of the article, Nathan Jansen stated, policymakers will want to leave the door open to restarting hikes again down the road if necessary. He adds, but if the unemployment rate continues to drift higher as we expect, a restart won't be necessary. The Bank of Canada relies heavily on data to make decisions about the interest rates. The current data suggests that maintaining rates may be more favorable than increasing them. However, our economy has proven to be unpredictable in recent years. Therefore, the possibility of rate cuts cannot be ruled out. The Bank of Canada will closely monitor the data, and if the trend of a slowing economy persists, it's likely that rates will remain stable throughout the rest of this year. Thanks for watching this video. If you found any value, please like, subscribe, and share this video with a family member or friend who would also benefit from seeing it. If you have any questions, make sure to reach out to my office at 519-250-4848, and either myself or one of my mortgage advisors will be happy to help. It's RASHA Ingratta with Mortgage Intelligence. Have a wonderful day.